Hey, and it's Unbiased Trades here, and back for my another weekly video. I'm sticking with it. I'm doing a video every week, so make sure to turn on that notification bell if you want to see the video every week. It will always be trading related or something very close to it. So yeah, today I'll be talking about why trading is a business. I don't really care about the definition of a business. Maybe some people say it's not perfect definition or whatever, but I think day trading in itself, the mindset you need is that it's a business and it's your business and it's your responsibility to keep it going the right track. A business doesn't have to be profitable straight away. Same with day trading. You can't expect it. So yeah, I'll just get straight back in. So number one is it is not an investment. I hear a lot of people online being like, chuck in £2,000 or dollars into your day trading account and you'll turn it into, 10,000, 20,000, 40,000. Just like, you're sitting back and just watching the money come in. It is not an investment. An investment, something like if you invest into the S&P 500, yeah, you'll get 9-10% every year. Safe, you don't really have to do much. You just play the numbers and it's a long game. This is not like that at all. You are having to think why you're entering a trade, why you're exiting a trade, what your setup is, the criteria for your setup, psychological things that are affecting your setup or your trading. It is not as simple as just clicking and buying. So I wanted to get that out of the way. Number two, I don't know why this board doesn't let me cover stuff, but I always have to put it in red marker. The more serious you take it, the better. This is a really big mind shift change, I think, and why I've been focusing more on strategies of prop firms. Well, not strategies, more like, psychological and risk management from prop firms. And the more serious you take your trading of, you can't just place on a trade because you feel like it, or, there's nothing today, or let me just try this trade and see if it works. All those kind of things. I've done it many times and I still do. Like it's not easy to get over. Sometimes I won't have any setups for the day, but then I'll see something that's kind of close, but like it doesn't really fit everything, and I have nothing else to trade, so I'm like, why not? I can risk some money today. Boom, take the trade, lose like, even if I just lost 1R, in the best case, it's still just a waste of 1R. Like, why are you wasting money for no reason? It's not just, you can't just trade because you feel like it. Next is you need to keep records. This is huge. Statistics recently has been playing a huge hand into making my profitability better and my setups better. The more you understand your setup and the more you know the criteria, the less I think it's less easy to just take a stupid trade. You know that your setup, you know your criteria. You can't just be, you'll be like, well, this is obviously not my setup. I don't need to trade it. All those kind of things. It just makes it clearer when you're trading something like okay, if your idea is the gap and crap, I think a lot of people know this if you're short biased, but let's just say, it's gone up, I don't know, 100%, and you're thinking that's ridiculous. It's a low float, it's a fluff news, small market cap, there's sellers coming in on it, and you just click sell. That isn't a strategy. That's just, you're just kind of putting together some common sense from your trading, and taking a trade because of that. That is not how you're supposed to trade. You need your trades to be very systematical. Even if you're not an algorithm trader, I think it just helps. Some people have great intuition, but you shouldn't be trading off intuition. You should try and make that intuition into a setup or into something that can be tracked, and you can see the win rate of it, and you can see what are my losses? What are my average losses? What are my average wins? Am I getting 1 to 2 risk to reward? Am I losing way more, but my wins are really big, so it's fine? Like, I have bad win rate, but the wins are huge and the losses are small. All those kind of things you need to know. And the most important thing I'd say is it changes. Your setups change over time. This winter, I've had to realize I'm not in a summer market anymore. It isn't stupid hot, like it's not crazy, but it definitely is different. Things are pushing more than they used to in winter, and it's taken me a while to realize that. So all those kind of things you need to keep track. Any good business does. Just think of it as like your accounts. You need to keep track of your accounts, your trades, and journal them. Next is you need to manage. So what I mean by this is you need to manage your trades as if it was a business. So you can, I've never seen a perfect metaphor for this, but I've seen a lot of tweets and a lot of people saying similar things. But for example, you could view your trade as a sale. If you are putting on a sale, sale isn't the right word. It's not like a 50% discount. If you're putting on an item, so you're going short on a stock, you aren't gonna just let that, be bought for like 10 cents profit or something like that. You're gonna wait until the price you've already set before you listed the item. So if I place a trade and I'm thinking, okay, well, I according to my setup, I want 1 to 2, I'm gonna wait for 1 to 2. If there is huge indicators, obviously, like that it's gonna reverse, and I could easily see that I can just cut it here and not have a huge loss, not take it 1R, then that's good. Trading isn't perfect, but I think the more you try and lock it down into certain criteria, the more it helps, especially for new traders. I think the more experience you get, the more intuition, and you're just better at reading the market. So you can be taking those trades and, not always listening to your criteria if you've seen it before. But your first 2 years, 3 years into trading, you haven't seen enough. Like, I'm only in my third year, like second year and a half, and I know I haven't seen enough. I've seen a good amount, but everything, you can't just trade off intuition in the first year. The first year is just you're losing, sometimes winning, kind of realizing what a setup is, realizing what you're better at, what you're worse at, what your weaknesses are, psychological wise, all those kind of things. So yeah, just keep that in mind. Lastly, scalability. Day trading is you can scale it so much. It's crazy. That's really the biggest reason why day trading for me is better than something like just a normal job, because you do have control over your profits in a sense. In a sense, okay, depending on how much capital you have, and it's all about capital and all about if you can actually just stick to your rules and your setup. But it is hugely scalable, and I'm going to take you through this because I'm going to take you through compounding, and I think this is a great lesson to see. If you just stuck to your rules and your setup and your criteria, you could be doing really, really good. So let's get into that. So this is compounding growth. If you want to watch, you can watch Brian Lee, and he has an Excel table called the R multiples, and it's a really, really good way of doing this. This isn't a perfect Excel spreadsheet. I wouldn't use this to, trade off, but it's a good visualization of what it is. So let's say I had 7,000 in capital at the beginning, and I'm risking 1% of my account. You should never risk more than 1% of your account on the day. Unless you're more experienced, obviously, but I'd say 1% is a very, very good for 1% a day of your risk. So let's say I'm risking $70 and I'm looking for 1 to 2. My setup says I can normally get 1 to 2, so I'll go for 140 then as my reward for the day. So let's say that these first 4 days were just all profitable, right? That's beautiful. My capital is going up and my risk is going up. So you can see here that at the start I was risking 70 pounds, and now I'm risking 74 pounds. And that is in correlation to your capital size. So it's a really good way to slowly size up and slowly risk more, but you're never making a big jump or anything like that, and you're slowly winning more. So it's a really good way and stable way to just scale. So then I added into the formula that 2 out of the 5 days in the week you lose, and you take your max loss, which is whatever the risk is. So this is the 30 days. After 30 days of this, you end up at 9,345 pounds or dollars, and you're risking 93 pounds to make 186. So yeah, that isn't anything crazy. You've made just shy of 2,345 in a month. which is, that's great. That's really, really good. And also keep this in mind, this is working days, 30 days, so it's not really perfectly a month. Just keep that in mind. And then let's take you to the last 30 days in the working days of the year. So this is from 231 to 261. You are now at 40 grand for your account capital, 40.5, and you're risking 405 a trade to make 811 in the win. Same rules apply. You're losing 2 times a week, and at the end of your first year trading fully to your rules, fully sticking to your max loss, you're getting your 1 to 2 on your setup every time. You are taking some losses. That's normal. Your first year, you've turned 7 grand into 49 grand 526 pounds or dollars, and now you're risking almost 500 to make almost 1,000 in a day. So you can see how crazy that scalability is. That isn't anything crazy numbers wise, but this is just your first year. You have to think about it like, your first time in a job career, you're not going to get paid that much. You're, probably going to start with the very lowest salary you can get. And that's what it's like in day trading. When you start, you won't have that much capital. You won't be making crazy numbers, and you have to just realize that your growth is totally fine. And the small wins and the small losses do add up, and if you stick to them, you will end up very profitable. And now, if I did another example of that 49 grand in another year, I bet you could be seeing like almost 200k, 200, maybe a bit less. Okay, so that's just, that goes to show how scalable it is and why you should be taking day trading very seriously if you're trying to pursue it. It is definitely not easy, and it is very hard to do this. But yeah, thank you for watching. And this is just a small video today about kind of why you should be focusing on day trading if you're interested, and why you should be taking it seriously.